Hello there, traders and investors. Hello there. Welcome to Admiral Markets Market Pulse Weekly Update number 28 for the 28th of May 2025. It's Paul here. I hope you're all well. Hope you've had a good start to the week and are running towards a good end to month. As always, there's plenty to discuss in our weekly update. We're never short of either themes, topics, narratives, instruments to look at. So why don't we move on and progress through with our session this evening? As always, we start with a quick risk disclaimer. You can take a moment to make yourself aware of that, just remembering that ultimately you are responsible for your own trading decisions, and trading on margin does involve risk. Okay, so what's the agenda for our session this evening? As always, we appreciate that in life and financial markets. And so our sessions here are able to help you understand financial markets, regardless of whether you're, let's say, a short or you are a long-term investor. Most importantly, of course, is by understanding and analyzing global financial markets, we want to have advantage. And as always, what we will talk about is how you can trade and invest with Admiral Markets. So, as I said, we are never short, of things to talk about through our sessions. It's great to have you here with us for our session. Hopefully, it'll help you find use and give you some insight into what's going on in the world. As always, if you have questions or comments or feedback, or there's particular instruments or topics that you'd like to see me engage with, you can either put that in the chat box here or in the comments, or contact us and we'll be happy to take that on board. For those who don't know me, my name's Paul. Traded and invested for many, many years. Traded for funds, traded for clients. In my trading life, I primarily look to trade FX indices and commodities, where I'm a trend trader, sort of for longer term swing position trades, and a mean reversion and reversal trader for shorter term intraday trading. When it comes to investing, I am very much driven technically, but also intuition and also a sector focus. And we will look at that a little bit more as we look at in UK stocks in particular. As always, I appreciate there are some people who are joining us who are at the start of their trading journey, and but also at the start of their journey with Admiral Markets. Admiral Markets is a global financial brokerage that provides access to a wide range of financial instruments and various asset classes, and also provides you with a comprehensive education suite to help you on your journey, regardless of whether you're a shorter term trader or a longer term investor. With regards to the educational content, there are regular webinars with market experts. There is sessions like here where we're providing live market analysis. You also have access to the premium analytics portal. You also have access to the research terminal, which plugs into the Admiral Markets MT4 and MT5 platform. And there is a wide range of educational content on the website and also the Admiral Markets YouTube channel. So I commend them to you. I appreciate some people are more focused on the trading pathway, and if you are, well then, Admiral Markets provide you access to over 4,000 available instruments as FX and CFDs on commodities, indices, and stocks, providing a sophisticated trading environment with standard leverage for retail clients, allowing you the opportunity to engage with markets using both the MetaTrader 4 and MetaTrader 5 platform, and also the Admiral Markets mobile app for those of you who like to trade on the go. If you are more focused on a longer term investing pathway, well, Admiral Markets provide you still access to over 4,000 available stocks and exchange traded funds. There is also the ability to do fractional investing in terms of fractional shares and fractional ETFs. There is an auto invest capability in the mobile app. And when it comes to platforms, you have MT5, both as a downloadable version, okay, as you'll see, I use myself, or a browser-based web trader, and also, once again, still have access to the Admiral Markets mobile app. Okay, so when it comes to Market Pulse weekly update, as I said right at the start, we appreciate that it has been a rather interesting and eventful year. And if you're at the start of your trading or investing journey, okay, then I appreciate that during these rather eventful and volatile periods, being able to navigate them and be able to understand and analyze and help make decisions can sometimes be a little bit challenging. So hence we have our weekly webinar in which we look to focus on helping you navigate through the global markets and also kind of filter in and filter out the sort of, the tsunami of information that comes at us on a day-to-day basis. So every week we look at the major themes, the major news, the major narratives that are affecting markets for this next week. Okay, from today through to, I think, Wednesday, next 4th of June. Always do analysis of the major global markets. We'll also have, I'll share some of my ideas and thoughts about trading and investing, and also provide you with introduction to the technological solutions provided by Admiral Markets. The whole idea being to help educate you and also provide insight on markets and the way traders and investors can engage with them. So always plenty for us to talk about. But as I said, if you've got something you'd particularly like to see me focus on or talk about, then by all means, please let us know. Okay, so part of what we talk about, as I said, is about understanding the major news, themes, narratives that are ongoing at the moment. I appreciate if you're at the start of your journey, okay, there is almost like an overwhelm of information that is available to you, okay? It kind of can sometimes be perhaps a little bit intimidating if you're really at the start of your trading and investing journey. So there are a couple of elements to this that sort of try to get across to people is that one of the first elements you need to at least know is understanding when formal economic data is released. If you're at the start of your trading and investing journey, I don't necessarily expect you to be able to analyze economic data, but it is important to know when that economic data is being released, because when it is released, there's likely to sort of induce volatility into markets. And volatility is very much a double-edged sword. When you're on the right side of it, then it can make your trading and investing journey an enjoyable one. When you're on the wrong side of it, okay, it can lead to a challenging outcome. So it is in your best interests, okay, to understand when the formal economic data is being released. You can find that out on an economic calendar. There is an economic calendar on the Admiral Markets website and elsewhere on the internet. So there's no excuse not to be able to at least know when that major economic data is coming out. So what I do appreciate is even if you look at an economic calendar, there might be hundreds of pieces of data coming out. And part of it is, well, Paul, which ones should I be focusing on? Which are the ones I should really keep an eye on? So what I always try and do from this Wednesday to next Wednesday is just provide a quick insight, okay, on the sort of, as I said, the kind of major news releases, the major themes, the major narratives that we're seeing play out in markets to help you gain some insight and understanding into what's going on. So we have this next week is kind of a busy week. We have the end of the month, all right, and then of course we're into the start of June already next week. So we've had a bit of data already today. Earlier, what was this morning? Okay, coming into this morning, Australia released its CPI data there. Okay, its inflation numbers that came in a tad higher than had been expected. That has knock-on impacts, okay, in terms of any particular interest rate cuts or the trajectory that we would expect from the Bank of Australia. We also had the Royal Bank of New Zealand, okay, had their official cash rate, their statement, their press conference. They cut their interest rates by 0.25%, 25 basis points down from 3.5 to 3.25. That was pretty much expected. Okay, that wasn't a major shock. But of course, what people are interested in is the data coming out of the conference in terms of the statement, in terms of looking at the kind of future trajectory for the Royal Bank of New Zealand. What we have been released this evening, as we speak here, is the FOMC meeting minutes. Okay, it's the minutes of the last Federal Reserve meeting, and invariably traders and investors will be keen to see what insight they can be gleaned about the Federal Reserve's understanding of the overall economy, and also what their trajectory and what their likely direction of travel is. And so we will probably look at that when we switch across to the indices and the US dollar. We probably might already see a sort of kind of instant feedback off that. Tomorrow, okay, is the preliminary GDP, okay, quarter on quarter for the US. This is going to be interesting because people are going to want to see what, if any, impact the Trump tariffs have had already. Okay, even in just the, even though many of them haven't actually sort of hit home, many of them have been delayed. People are still going to want to see what, if any, impact that has had upon the US numbers. You've also got unemployment claims. And then tomorrow evening, for those of us here in the UK, we have Mr. Bailey, the Governor of the Bank of England. He'll be speaking, and of course, people will be interested to see what he has to say about the likely future, or the future direction of travel for the Bank of England and their interest rates. Friday of this week, we've got German preliminary inflation numbers. We've got Canadian GDP. And then for the US, we have the PCE, personal consumer expenditure, their price index numbers as well. Once again, people will be interested to see that, because the PCE number is what has a major influence on Mr. Powell and his team and their likely future decisions. Monday is interesting because normally Monday is quite quiet in terms of major data, but we have for America, okay, we have their manufacturing PMI numbers. And once again, we'll actually have Mr. Powell speaking as well, okay? And of course, people will be keen to hear what he has to say, as always. Next Tuesday, we've got Swiss inflation numbers. We also have the governor of the Bank of Japan, Mr. Ueda. He will be speaking. And of course, next Tuesday afternoon, for those of us here in the UK, there will be the start of the US dollar, the JOLTS job openings. Okay, of course, next week, first week of the month, Friday, we'll all be leading up to non-farm payroll. So we've got the JOLTS job openings on Tuesday, and you can see on Wednesday, we have the ADP non-farm employment change as well. Along with the ISM services PMI, okay, we've got the manufacturing PMI on the Monday, and also Canadian, okay, the Bank of Canada's their rate statement and overnight and their conference. So, as I said, this next week is probably going to be a busy week. Quite a bit of data coming out, okay, for both the US, but also for other major nations, including here in the UK with Mr. Bailey's commentary. So it will be a busy week in terms of the formal economic data. And as I said right at the start, I appreciate it is important, okay? It is important to understand when the major pieces of data coming out and what you can do to help yourself be prepared for that. But I also realize that, as well as the formal economic data, we are now in a period of change whereby we also have, quite a few geopolitical elements going on in the world. And then we also have President Trump and his policy, decision-making, his communications, which can invariably, they also have a particular issue. And we will be able to see some good examples of that when we switch across to the live charts in a few moments' time. So a busy week, okay? So it always pays to be prepared. Okay, before we look at the charts, you hear me every week talk about setting expectations, okay? I want to have a baseline of standards that everyone's playing from in terms of, before you engage in trading and investing. First of that is risk management is absolutely key, so learn it, honor it. If you're at the start of your journey as either a trader or an investor, it is important to understand risk management. Make sure you go on to the Admiral Markets website, the Admiral Markets YouTube channel, where you will find lots of educational content on there that will help you with that. So make sure you understand it and you're on top of it, and that you are enacting it in your trading and investing. Always know what news is coming out for that week and for that session, and we've just had a little look at that. Okay, let's try my way to try and help you understand that. Where possible, conduct your analysis before making decisions. So what does that actually mean? So for me, I do a lot of work on the weekly chart. I like weekly charts. Whilst I will trade and invest across all time frames, I do like the weekly charts. And so, for example, I quite often will do my weekly analysis, my major analysis, sort of Saturday morning, a couple of hours on a Saturday morning. All right, which means the markets are closed. Okay, there are no distractions from either other work or no distractions from candles moving. So I can sit down, I can do my analysis, create my trading and investing plan for the week ahead, so that when it comes to sort of Sunday night into Monday, I'm able to enact that for the sessions ahead. Goes without saying that ensure you have a good internet connection and that you are rested and prepared before the sessions, before you're making good decisions. And just a point to note that for longer term trading and investing, we are looking to be long only buyers through the invest.mt5 account here with Admiral Markets. And as always, if you're new to our sessions and joining us and want to sort of quickly understand, how my charts are set up, you'll find pretty simple: blue or green bullish candles, red bearish candles, a blue 20-period simple moving average, a red 50-period simple moving average, green 200-period simple moving average, and also some fractals on there as well, which are the sort of small grey triangles that you can see. Okay, so before we just switch across to the chart, I appreciate that many people will understand and know about Admiral Markets from the trading pathway, but may not be aware that you can also have an investing account with Admiral Markets. You can open an invest.mt5 account, okay, then log into your normal dashboard, open either a browser-based web trading platform or, as you'll see me, download the MT5 platform. And then you would use the MT5 platform as you would normally, whether, if you've been using it for trading FX, CFDs elsewhere, okay? It's the same functionality. You're just able to sort of search and engage with UK shares and some UK ETFs. So there is that. If you're not aware of it, you can make yourself available of it through your dashboard. All right, let us switch across to the chart, shall we? So if you just bear with me for a moment, what I'm going to do is switch across to the charts and we'll have a look at what's been going on in the global markets over the last week. So as I said, just bear with me for one moment. Okay, so I'm hoping that you can still see me, hoping you can hear me okay. What I have up here is I have it's the Admiral Markets MT4 platform, trading platform. So what you'll hear me and what you'll see me enact is that I generally use the MT4 platform for trading, and then I use the invest.mt5 account for longer term investing. The reason I do that is that I find for myself, okay, and this is personal element, is that it helps me to have hard boundaries. To have hard boundaries, so I have an MT4 platform where I just focus on trading, shorter term trading, and then an MT5 platform where I'm operating as let's say a long term only position trader or long term investor. So that's why you'll see me moving between the two platforms. And as I said, I find that helps me to have those hard boundaries in place. But what are we looking at here? What's this telling us? How can we use this? So what I have here is I have a profile set up here. This is as indices. So what have I got here? I've got Dow Jones on the weekly, S&P 500 on the weekly, Nasdaq on the weekly, ASX, which is the Australian index on the weekly, Hang Seng HSI 50, the Hong Kong index on the weekly, the JP225 Nikkei on the weekly, and then FTSE 100 on the weekly, and then the Germany 40, the DAX. So I have this to give myself a quick snapshot. I've got, US, Europe, Asia, very quick snapshot, okay, of the major global indexes. And I find that helps me to get a quick, as I say, snapshot of, is there a good trend in place? Are those markets consolidating? Are they reversing? are we in a risk on environment or are we in a risk off environment? Because once I understand that, well, then, then I'm able to sort of filter that down towards making out my kind of trading and investing plans. So what have we been looking at? What's been going on? It's been an interesting couple of weeks. I'm kind of curious here. Let's have a look at. Let's start with the Dow Jones. Okay, here. So remember, this is a weekly chart of the Dow Jones. This is this week's candle, but you have to remember, okay, this is Wednesday evening. This candle is not completed. So whilst I'm looking at it and interested in it, it is only when that candle closes on for what was here in the UK Friday evening. It's only when that closes that it becomes really quite irrelevant. All right. Until that time, this could change hugely, massively, okay, over the next couple of days. So I look at it, but I don't make trading decisions based off it. What I am interested in is that those of you who join us or watch this on a regular basis or talked about okay how we had a little bit of that tariff fatigue led into a little bit of a kind of a risk on relief rally. But then, as you can see here, last week, okay, that kind of came to a bit of a juddering halt. That is it's a bearish candle, okay? It's a bearish candle. It's a bearish engulfing candle. Then, the high and the low completely, they engulfed the previous week. And this week we're looking to see what is actually happening there. Now, of course, we're looking at the Dow here, but those indices are the American indices are pretty similar, right? Let's just show you, okay, in terms of how they've operated over the last couple of weeks. Okay, we can see that whilst the Dow basically was an engulfing, we can see these candles were bearish candles last week. This week has been a little bit bullish, okay, so far. But remember that this candle has to complete. What we also have to take into account, which we didn't really sort of talk about earlier, is not only do we have the FOMC meeting minutes this evening, we also, after the market close, we have also got NVIDIA. Okay, they have got their earnings release. Okay, and of course, everybody is going to be keenly interested in what those numbers are, what the CEO has to say about the tariff situation, and also the kind of the restrictions with regards to China itself. So markets today on the intraday way have been a little bit quiet, partly because they're waiting for FOMC meeting minutes and they're also waiting for the NVIDIA data as well. But with that in mind, why don't we have a little look at NASDAQ? NASDAQ has run up there bullish there, hasn't it? If I go down to the daily chart, okay, we ran up there, but then we actually had, a little bit of a Friday, okay? Friday was a little bit of a bearish day, and it might be easy. I wonder if we go down to, let's see. Yeah, actually, this might be, here we go. So this was Friday, okay? So we're now on an hourly chart here. So let me just, so this is Wednesday. Let's go, that's Tuesday. That was Monday, and that of course means this was Friday, okay. And what we did have was we had a huge dump there, okay, on Friday, and a lot of that was to do with President Trump's comments that he was going to put 50% tariffs onto the EU. That was enough, okay, to put frighteners across equity indexes, but also across FX pairs, which we'll look at the moment. But interestingly, we can see, and this is probably a representation of, how markets are starting to shrug off some of those comments, okay, some of those announcements, that even though we had that, really quite major drop there for a couple of hours, already within a couple of days, we are much higher above it. We have bounced back from that, okay. That in itself is quite, I think that in itself is quite telling, and it is quite insightful into a level of resilience within markets. Now, interestingly, we started off today with a little bit of a bearish move. Let's have a little look on the Nasdaq here. So we can see when those US markets open there, and we dropped away down. But really, you can see that this is a 30-minute chart. So what's that? 1, 2, 3, 4. For about the last 4 hours, we have grind higher a little bit. But as I said, people just generally waiting to see the FOMC numbers and then also the NVIDIA numbers. So I've just gone down to a 15-minute chart. Let's just go down to a little, even maybe a 5-minute chart. Okay. So, we climbed London session. Okay. It was a little bit of a grind down. We had a little bit of a bounce there. Okay. There'll be some geopolitical news. We had here we go. We had the sort of kind of a bit of some bullish maneuvering at the start of the market, dropping its way down, and then, as I said, it has just ground its way up there for the last few hours there. And as I said, I think we will continue to do that. FOMC has, let's just see there, okay. The FOMC has just, given us a little bit of a bump, but nothing really to get too excited about. As I said, I think most of the markets will be waiting to see what NVIDIA has to say, and that will be the major driver. That's what I'll be looking for. So that's what we're seeing on NASDAQ, and it's not massively different, okay, on the S&P 500 and also on the Dow. So, we had those bearish candles for last week was a lot of that Friday afternoon, Trump announcing his tariffs on the EU, but there's already talk and conversations about resolving that. And as I said, I think markets are kind of just basically batting that away quite significantly. And kind of one of the elements of that is, and we're going to look at it a bit more, is this is the Nikkei, okay, the Japanese 225, which we talked about, I think, last week, about how we had rallied, but we had basically bounced off the 50-period moving average. So that is a very nice rejection candle, and we looked like we were following through on it. But actually, what we can see here is that if I just look at for this week, we've actually had going down to the daily chart, we have had a bit of a daily, a bit of a bullish week there. Friday, we kind of resolved. We're a little bit of indecision, but then Monday, Tuesday, we've had bullish days. Maybe not today, but I'm kind of curious about that because, what we have to see is that Nikkei 225 is very much linked to the Japanese yen, okay? Japanese yen and the Nikkei are invariably, especially the Nikkei, is it's an export-led economy. So companies on the Nikkei, they are, of course, they're correlated with the strength or lack of strength of the Japanese yen. So what we saw when here at the start of this will be the start of April. On the start of April, okay, what we had was the Nikkei dropping because of the sort of Trump tariffs, but also that time we had the Japanese yen spiking higher, okay, because Japanese yen is still seen as a safe haven. So when people were uncertain and worried, we see capital flows into Japanese yen, which means it added to the tailwinds of the drop in the Nikkei. But then invariably, as that kind of got sorted out, what we saw was the yen weakened a bit and the Nikkei rose, because as the yen weakens, that's good for Japanese companies. And we had a little bit of a kind of a drop down, but then this week, what we've seen, as I said, this kind of little, so far, kind of bullish moves across the Nikkei, and we're going to look at the yen in a moment. Just gives an indication that there is a case of yen has been weakening. And if yen's weakening, that is a sign that let's say the sort of risk off move we saw at the end of last week, okay, or rather that sort of knee-jerk impulsive reaction to Trump's comments, has almost been washed off already. And I find that, as I said, that's fascinating insight into traders and investors' mindset at the moment. And of course, that can change. It will change at times, but you have to base your ideas and plans based upon what you can see there in front of you. All right, let's have a little bit close to home. So Europe, okay, the DAX. What have I got? The DAX. The DAX is on the weekly chart. We've talked about what a great trend it was, how we double topped, we came away. We couldn't close beneath 20,000 or the weekly 50. And, the last few weeks we talked about how, we really rallied back strong to new highs. And we have continued to close to new highs. I wouldn't, on the weekly chart, I wouldn't necessarily say that price action excites me in terms of looking to really be heavy on the DAX, okay, on long-term positions, because of that price action. But the reality is, when we look at the daily chart, we broke to highs, we came back, we tested it, we put a bullish engulfing. This was Friday. Yeah, this was kind of Friday's. How would you describe it? It's almost kind of like that knee jerk, okay, the fear of it, especially tariffs against the EU. But then, as I said, we've already we've washed it off, and yesterday we closed on a daily chart. We closed at new highs, so that in itself gives you an indication, okay, of what markets, how resilient markets have been. And there we go, 4-hour chart. You can see the Friday candle, that Friday 4-hour candle when Trump announced his tariffs. And then, you can see, over the weekend, the news came out, it's gapped up and we've continued. Now, we sold off a little bit, today, but generally that has been, for the most part, quite bullish, right? That's quite bullish. And as I said, it just find it, fascinating that despite all of the negativity, markets tend to be resilient and tend to be grinding high, even if it's the price action isn't always the most picture perfect. But listen, welcome to trading. All right, what you want and what you get can be very different in terms of what you see. So, but it gives an indication of that strength, which we, as I said, we've just seen a bit in the in the Nikkei and in others. Looking closer to home in terms of the UK FTSE 100, having put in a high for the year, dropped, okay, held above the 200. We've ground our way high, but certainly nothing like the DAX, okay, or a couple of the American indexes. We've just continued to work our way. Of course, this is this week's candle, but remember, this is a weekly candle. It still has a couple of days to go. If I look at the daily chart there, you'd say that, this month it has ground its way higher, hasn't it? It has ground its way higher. It has stayed above that kind of 20 period and 50 period and 200 period daily moving average. And it has just worked its way a little bit higher. That was the kind of Friday tantrum. And then, of course, we were off here on the Mondays, bank holiday. So we'll come back into it. But let's go down to the 4-hour chart. That's that Friday afternoon, it's almost kind of like a Trump wobble. But once again, even FTSE has kind of worked its way back up to the highs. Really nice bearish key reversal there, but back down to the 50, and we've filled that gap, and I've been now waiting to see. Okay, having filled the gap, can we turn it around? Can we get it back up above the 4-hour 20? If we do, that's bullish, and then I want to see it back up to these highs at around about 88.30. That's what I'll be looking for with regards to the FTSE. So there we go. We've had a little bit of a look through, an idea of the indexes. This is all great. Um, we live in a world where the NVIDIA data could be absolutely shocking, and that changes the whole picture overnight. I don't think it will be. All right, I don't think it will be, but everyone will be keenly waiting to see how they have performed for the last earnings numbers. All right, so there we've had a look at indices. Let's have a look. I appreciate a lot of people love gold, so let's look at gold again. So gold, here we are on the weekly chart. Fabulous uptrend, but we talked about actually, were we double topping here, but we didn't follow through. And then I was talking about, well, is this now actually, this could be just a channel, or maybe it is a bull flag, and if we go down to the daily chart, that's what we were looking at. Remember last week we were talking about how price had come back to the 50 period moving average, and we bounced off it really nicely. Rejection candle, lots of wicks there off the 50. And where did we work our way up to? Well, we worked our way up to kind of that scruffy sort of top of the trend line. So at the moment, I would see this still as a little bit of a channel. It could be a bigger flag pattern. So so far we have we've kind of reversed there, and gold has dropped a bit. Some of that's to do with dollar, which we're going to look at in a moment. So if this is to continue to hold, what I'm interested in is see how the 20 period moving average is acting as support at the moment, acting as dynamic support there. Okay, I'm interested to see if that holds, well then maybe we do get a breakout. Okay, maybe this has been a bull flag, and the bull flag ended with the rejection candle. So that is the bullish scenario. For me, the bearish scenario would also be that if we basically work our way back down to the lows there, okay, of this channel. Okay, so I think what we will see is that over the next couple of days, as it's kind of tightens up, I'll be waiting to see. It's almost like pressure is coiling up, and I'm waiting for it to burst. One of the things we'll see with that is actually how is the dollar impacting that, and that's what we're going to go and look at now. So we've looked at indexes, we've looked at gold, and of course, as I said, I think quite a bit of it is to do with how the dollar is moving at the moment. The dollar in itself is being rather volatile. Okay, and we're going to look at that now to sort of try and get a little bit of a better understanding of it. So In the same way that I have profiles for my indices and other things, I also have a profile for the dollar. So here we go as Aussie dollar on the weekly, Euro dollar on the weekly, pound dollar on the weekly, dollar Swiss franc on the weekly, Kiwi dollar on the weekly, dollar CAD, dollar yen, and then the dollar index. Okay, once again, the whole idea being that I have this as a snapshot to be able to see what this is showing me. All right, what can I see any kind of clear trends, okay, or even clear consolidations, markets reversing. Is there, strength and weakness with regards to the dollar and its other major currencies? As always, what we're going to look at, start with the dollar index, the weekly chart here, okay? Bang, great downtrend, back down here towards 100. And we were talking about how actually, we'd been working our way up there from that. And then we got, indications of, tariff, let's call them tirades, in going on, and actually it pushed price down to the 100 and beyond. But interestingly, we've come back up, as you can see there on the weekly chart. The daily chart gives us a little bit better idea. So let's go down to the daily chart. Those of you who join me, I'd be talking about, it's sort of an inverse head and shoulders with 100 as a big neckline. And what I'd been looking for is, pop to the 50, which we did, back down to 100, which we did. And I was thinking, we could move that way. But as you can see, we actually extended that. And part of that, once again, is those comments about tariffs. Okay, a couple of comments also about people's concerns about US treasuries, rightly or wrongly. Okay, people concerned about those. Okay, and of course the impact that has on the dollar. But once again, this week, okay, the last couple of days, have been quite strong for the dollar, and we are back up at the big round number of 100 once again, back up at that big round number that seems to sort of, we have just literally been pivoting around, okay, for the last 6 weeks or so. So let's go a little bit lower, see if the 4-hour chart. So the thing that interested me on the 4-hour chart here was that, this was last week on the 4-hour chart. We bounced off, okay, the 100, then we come down beneath it, then we come back up to it, we double bottom there, then we flip it from being support to resistance, and then we started this week with a kind of really nice double bottom that basically the second leg had as a bullish engulfing. That in itself was, very pro-dollar, and it's moved really kind of nicely back up towards 100. That in itself has been kind of a nice move there. Whereas the indexes, the equity indexes, have been a little bit calmer in front of FOMC meeting minutes and NVIDIA. The dollar has had, that nice double bottom followed through. Okay, followed through with the price action up there. So of course that gives me an indication or an interest in, well, okay, how has that impacted the other majors against the dollar? So why don't we have a look at that? So let's start with euro against US dollar. Of course, inversely correlated to the dollar index. So whereas the dollar index has been collapsing, euro pumped its way higher. But then, we fell away a little bit, okay? That kind of anti-American rhetoric, okay, pro-Europe rhetoric, which is what took us here, started to sort of slide away once we kind of realized the reality of the situation. And a bit like the dollar index has been sort of, back and forth over the last couple of weeks, so has the euro, so is the euro dollar. So let's go down a little bit into lower. Here we go. So I'm on the daily chart for the euro dollar here, and we looked at an inverse head and shoulders for the dollar index, and a head and shoulders for the dollar, and euro dollar. We came back down to the 50, and then we bounced up to the 220, and once again I was kind of expecting us or looking to maybe drop this way, but we extended that leg, okay, in the same way that the dollar index extended down, euro dollar extended up, okay, and tickling the soft underbelly of kind of like 114.30. But once again, the last couple of days we have sort of dropped away again. And now for me, I'm just going to clear this out. Now I'm going to look at 20-period moving average. There's a bit of resistance there, but then it becomes a bit of support. Okay, as it comes down here, what will happen? Will it bounce off that? Okay, or and I think this is perhaps more likely. Do we go down to the 50? Okay, that's what I'd be looking at personally. That would be my own particular view. But what I see from that is that if we look at this on the daily chart for May, we have been in a range between what's that, about 111 and 114. So we've been in a kind of, let's call it just over 300 pip range, with a couple of swings back and forth there, isn't there? There's to me there is no real clear trend there, unlike April, where we had a very clear trend, okay, and then a little bit of a pullback off that. This month has been a much more consolidated month, okay, much more consolidated month, and I'm kind of curious to see, well, will that continue? Okay, what are the sort of things that would maintain that? Okay, so at the moment, of course, there is the, let's say, the tit for tat with regards to tariffs. Okay, even though they talk about delaying it and negotiations, etc. Markets will need a bit more clarity, I think, about how that works out for both Europe and the US. And if there isn't that clarity, then I think we continue to sort of, bounce around in that range. If there is clarity, okay, one way or t'other, then we can see maybe a push for Europe, or a push, a push for the dollar, which would mean the euro dollar weaken. So that's what I'm going to be looking for, from start of next week, is there the kind of clarity on those EU-US tariff talks, okay? And that in itself have an impact on whether we stay in this kind of range or we look to break and make a new direction. So that's how it's affecting euro against dollar. How is it affecting the other majors there? Okay, well, certainly when we look at it, there's kind of there are, if not repeatable patterns, though, there are kind of echoes going on there. So certainly if we look at, like, for example, dollar against Swiss franc, go down to the daily chart there, once again, okay, dollar against Swiss franc is not dissimilar, okay, not dissimilar to the dollar index. We pushed up but what we have seen here is that kind of, looking at that, you might say a inverse head and shoulders, followed by, a bull flag there. And these last couple of days here, that is a very scruffy morning start, which is a bullish, which would mean that, once again, a bit like the euro, see how the 20 period moving average on the daily chart is just going sideways. For me, if we get above that 20 and then above that 50, that to me would be bullish. Okay. And, listen, I don't think it would do it before the end of this month, but it could. It could. A couple of days, trading days, it could, if there was some particular news as a catalyst. But to me, I would be, at the moment, I'd be looking at that as bullish, again, the US dollar against the Swiss franc, which means, as I said earlier, there is resilience there. If the Swiss franc has been immensely strong, but if it's weakening against the dollar, that is an indication of dollar strength, but also an indication that Swiss franc is weakening. Is that an indication that, that, as I said, we're moving from risk off to risk on again? And that's what I'll be looking to see how that plays out for the next couple of weeks. So that's what we're looking at there. What I want to do before we have a look at the UK, let's have a quick look at Japanese yen. All right, and remember, I was talking earlier about risk on, risk off. What I've got here is the is the kind of this is my yen profile. So I've got dollar yen on the weekly, euro yen on the weekly, pound yen on the weekly, Swiss yen on the weekly, CAD yen on the weekly, Aussie yen, Kiwi yen, and remember the Nikkei. So what I'm interested in is, the dollar against the yen. We had sold off a bit, but this week so far we're pulling back. Okay, CAD against yen, we had sold off the last couple of weeks, but this week has been, CAD strength, yen weakness. Okay, euro against yen, we had sold off, but we've rallied this week. Euro strength, yen weakness. Okay, Aussie against the yen, we had sold off, but it's not as strong, but we're pulling back a little bit. Okay, yen weakness there. Okay, pound against yen, a couple of weeks of selling down, but now this week we've pushed up, which is pound strength, yen weakness. Same for Kiwi yen, okay, and also same for Swiss yen, okay. So I'm looking at that as, this week has been a bit of a sort of risk-on week, a week, which means a weak for Japanese yen, okay, which means that, as I said right at the start, there's a bit of resilience there, a bit of bullishness there, okay, despite everything that might be going on in the news. Swiss franc has been weakening, Japanese yen has been weakening. That's a sign of kind of, people being a bit more at risk on. And also, as I said, the kind of the dollar starting to maybe have a bit of a bullish week, and a few of the other risk on currencies having a bit of a better week as well. So all of these things, as I said, it all plays towards building a picture. And and we'll work with that as we run towards the end of this week. Okay, so what we'll also have a look at here is we'll look at British pound and then some UK stocks. Okay, let's have a look at that. See what sterling is telling us at the moment. So just have a little sip of water. Okay, so here's my UK profile, or rather, sorry, my sterling profile, and what I have here. So it's sterling profile, pound against dollar on the weekly, euro against sterling on the weekly, pound Aussie on the weekly, pound Canadian dollar on the weekly, pound yen, pound Swiss franc, pound New Zealand dollar, and the FTSE. Okay, so let's have a look at cable. Okay, so I was curious about this because I think we talked about the last couple of weeks. We've been up against last year's highs, and we printed what is three kind of bearish candles there. Lots of wicks to the north side, but we didn't really follow through on that before we launched ourselves higher. Now, admittedly, a lot of that was to do with dollar weakness, but this week, remember, this is only Wednesday evening, so this can change. But I'm just looking at that candle in terms of that is dollar strength this week, as opposed to sterling strength. If I look at here, the last couple of days here, that's what we've played at. And if I look at the 4-hour chart, okay, 4-hour chart last week, bosh, look at that. At the end of this week was a really good, strong run. But what have we done here? This is double top. If you remember, the dollar index, we looked at a double bottom. Euro dollar, we looked at double top. Pound against dollar, we've put it in a double top there, okay, and we've had quite a nice move down. And where have we moved towards? Well, once again, that kind of last year's high, which, as you can see, did act as a bit of resistance. Now we've got the 50 and that number there, the 130, but 134.30. Is this going to act as support here? Watching the price action, okay, before it moves up, that would be an indication of some dollar weakness, some sterling strength, or does it slice through and go towards the 200 period, in which case that to me is some dollar strength coming back into the market and some sterling weakness. So I am here, for the next day or so, watching to see how does price react in this area. How does price, I'm going to let the market play its hand, so I have a better understanding of of where it wants to go and what and what the dollar is looking to do. Pound against Japanese yen, we just said there. Okay, you can see on the week chart, this week has been a strong sterling and a weak yen. So there is that kind of, as I said, risk on. And a little bit even that with the pound against the Swiss franc. Yet we've had a couple of weeks, okay, of the sterling rallying against the Swiss franc. Last week was a bit of an indecision candle, but this week is, well, we're bullish so far, but we'll wait and see. Let's go down a little bit. Let's look a little bit deeper into the pound against Swiss franc. Yeah, pound against Swiss franc on the daily chart, yeah, it's interesting that, isn't it? I look at that as interesting for the last couple of weeks, that really we have just been in a very, very tight range there between, let's just bring this up here, between, what are we looking at here? Let's get the old cursor and such up so everyone can see it. What's that, about 1040 to 1040 to about 1190, 12. Okay, so 1040, 160 pip range there for about the last 2 weeks. Just, and we're around about the, in beneath the daily 200, the daily 50, the daily 20. You hear me say it all the time, when price and moving averages all come together, it's almost like it's the calm before the storm. Okay, it's like trying to push two north ends of magnets together. Okay, they push and then they repel themselves away, and that's, to me, that's what it looks like it's doing there. Why is that of interest? Well, remember, we're saying Swiss franc has been strong, and it's been strong because there has been a real risk-off sentiment overall. But that is clearly changing. Sterling has been the benefactor of some of that tariff fatigue, risk-on sentiment. So if we're coiling up, it means, the way I view that is that we are getting ready to make a move out it. Is this going to be a risk-on move, in which case we see the pound against the Swiss franc rallying higher? Or is this going to be a risk-off move, which is, of course, means that we're going to see the pound against Swiss franc lower and bearish? We've talked this evening about, excuse me, there's been a kind of a little bit of bullish resilience in terms of holding on. Maybe this will help cement that and give us an additional layer of clarity about that as we watch it over the next couple of days as we run in towards the end of the month. So not terribly exciting, for the last couple of weeks if you're a trend trader, but listen, if you're a shorter term range trader, that's very good. If you're a watching a row risk on, risk off sentiment, equally that is good. That is good as well, and that's what we're particularly looking at there. So I'll be keeping as always, I'll be keeping an eye on that. Okay, so the condols, what we've seen over the last few weeks has been a little bit of sterling strength against Aussie, strength against Kiwi, strength against Canadian dollar. Normally, we see those condols strengthening when there is a risk on sentiment, and we have talked about that in the past. I think a part of it is a case of sterling is in a unique position at the moment, as in it is not tethered to, it's not tethered to the EU, despite Mr. Starmer's intentions and plans, but also it stands on its own 2 feet at the moment. Okay, and so during let's say these tariff negotiations, okay, the UK so far has done okay out of that, and I think that has been reflected in an element of bullishness within sterling. Will that continue? Well, I would say at the moment, yes. But we will have to wait and see either the US China trade talks, the US Europe trade talks, and actually how the UK can basically play its cards to its best ability. Okay, that would rely upon Mr. Starmer and Miss Reeves doing their job really well. I will leave that to you to decide and consider whether they're capable of that. I think we will find, time will tell. Talking about that, here we have the euro against the sterling. Okay, in the weekly chart, I've talked plenty about the power of that weekly 50-period moving average. Okay, it's resistance here, it's resistance here, then the PO20 becomes support, and then we launch the way up when we have that kind of anti-US rhetoric. But then actually, as I said, as people have realized what's going on, we can see that euro has weakened, sterling has strengthened, and here we are. And we talked about this last week, back down to kind of 84 and around the sort of the weekly 50, and we're looking to see, well, is it going to flip from being resistance to support? That's what we're kind of curious about. But look at the daily chart. I would say a little, not massively. That we've just looked at that pound Swiss, haven't we? Excuse my drawing there, but you get the gist. That's been really the last couple of weeks of being in a rather sort of dull sideways kind of range. That's the way we'd be looking at it. Is that a case that, because of the Mr. Starmer's EU reset talks last week or two ago, that invariably, that's just basically pulled all the volatility out of euro sterling, and actually the volatility has gone elsewhere, okay, into euro against US dollar. The sort of, the US China trade talks, okay, and elsewhere rather than euro against sterling. Perhaps this is what's happened, is we've seen the kind of volatility at the moment just kind of wither on the euro sterling. So not terribly exciting for me there. Okay, it's just more part of building up a picture. Okay, let us switch across and have a little look at the some UK stocks just for the last few minutes to finish off. As always, okay, just have a quick look at this is the MT5 Investor MT5 platform, and we always have a little look at the research terminal. There's lots on here that you can particularly use, okay, and work out, okay, in terms of news, data when it's coming out, also sentiment. As always, a kind of intrigued to see what the corporate calendar, and I use the filters to basically, let's just look at, let's say, for example, earnings for EMA FTSE 100s, all right? So we can just start to tidy that up and look at the exact ones that I want to look at. So we've got Auto Trader Group, okay? They are releasing their earnings as well. I think it's tomorrow, is it? Yeah, Thursday, 29th and stuff. So, we'll be interested to see what we have there. When I look at the kind of some of the news data, okay, and what we've seen today, then it gives us an opportunity to have a little look at some of the price action. So, Lloyd's, who we have looked at in the past, okay, they had a bit of a down day. Okay, they were down about just under 2.5% today. A lot of that based upon their kind of headwinds from economic data and people's anxiety about the about, let's say, UK economy. So if we look at Lloyd's daily, here we go. This is the daily chart of Lloyd's, and as I said, it's down about 2.5% today. Okay, and of course, that's what made the news. That's what got people excited. That's what got people a little bit fearful and anxious. And of course, being down 2.5% a day, just under 2.5% a day, but I think it's important that sometimes you need to put these things into an element of perspective. Yes, okay, it had a bit of a poor day, but once we start to kind of look at the bigger picture here, what we can see in elements of is a case of, here we go. Let's just look at the bigger picture. If I go to the weekly chart, well, the weekly chart has actually really from the, let's say, the kind of lows at the end of 23, start of 2024, this kind of bullish engulfing key reversal, we've kind of just worked our way up there. The 50s acted as nice support. Then we fell back. That we did fall back strongly, but then pretty much every stock did at the start of the sort of the tariff talks. But we couldn't get beneath the 20, and we've rallied stronger from that. And so yes, we have had a bit of a down day here. But when you start to put it into that bigger picture, and when I look at the monthly chart, go up to the monthly chart, we can see that actually we're in a pretty strong position. Okay, from I think we talked about this a few months ago about we'd spent a couple of years really just trading between about 40 pence and 56 pence. Well, now we're up here trading above 75 pence. Okay, so today's data is not great, but you have to put it into that big picture, okay, and look at how that particularly plays out. And so, we'd want to have an understanding of that. Also, we had Kingfisher. I think they were the biggest losers on the FTSE 100. Okay, I think it's sort of kind of a sort of some of their kind of trading results weren't anywhere near as good as people had expected. So, what was that shows? What does that shows in the market here? Let's have a little look. Let's get the chart up. Boom. Okay. So we can interested. So we can see that today. Okay, we can see that today. We kind of gapped down from yesterday. From where we closed yesterday, we gapped down, and we tried to rally up, but we've fallen back a little bit. Let's have a little look on our intraday. So yeah, I'm looking at the hourly chart of Kingfisher, and we can see that actually, that how markets reacted to the numbers. That we kind of gapped down and we pulled up. We haven't filled the gap, okay, but it's kind of bullish that we kind of we rallied from it. And if I look, let's have a little look on the weekly charts. Yeah, Kingfisher is an interesting Kingfisher. They have kind of multi-retail proposition. Okay, lots of that around, let's say, property improvement, etc. And we talked about this last summer that the new inbound UK government wanted to unleash property, property building, and had a pretty stringent target of, I think it was like 1.5 million homes in 5 years. Hence why what we saw here around here, back of the sort of summer of 2024, any companies that are involved in kind of property, looked to basically benefit from it. As the kind of the rhetoric turned into attention to details and Miss Reeve's budget, well, we can see that actually that had the opposite effect, okay, on property companies and companies like Kingfishers. But we've worked our way back up, okay, and but we have dropped our way back down over these last couple of weeks. I would be still looking at this as, let's zoom out a bit. For me, I would be, let's have a little look at this number here. Yeah, we're just quickly drawing that on there. Let's have, yeah, I might have it at about 300 pence, £3 there. Okay, I would see that kind of number there, and then I'd be looking also probably around about, yeah, here. So I'd be looking at that as, an awful lot of the business over the kind of couple of last couple of years, really. The majority of it has been encapsulated between around about 230, maybe 220, maybe even £2. Okay, let's just see. That was what two. Yeah. So here we go. Let me just. It's always good to make sure you got your levels in so we can see. Bang. So yeah, so you might say, okay, between £2 and £3, every time we've come above it, we've come back beneath it, and that's what we've done here. So for me, this might be a case of looking as a position trader within that boundary. Okay, for me, I'd need to see it holding above £3 for it to be a long-term bullish play. In the meantime, I'd be looking at that as kind of it's trading back into its range, and that's where we find ourselves. Okay, in which case I'd be looking for us to drop to about 230 and then back up to £3. That's the way I would be looking at that personally for myself at the moment on that. So that was Lloyd's and Kingfisher. Okay, not great days, but hopefully just helping put it into a bit of perspective. Okay, we did have. I wanted to have a quick look at just to finish off, because I think last week we talked about JMAT. Okay, Johnson Matthey. Interestingly, we're talking about, here's the monthly chart of Johnson Matthey. We talked about actually, were the numbers going to be good and help break this descending wedge? That's what I was looking at, and you can see for yourself, boom, that's what happened. Okay, we talked about it last week about this being an opportunity, and we can see on the monthly chart, and admittedly we've still got a few days the month to go. That has been rather bullish. If you look at the weekly chart, yeah, you can see for last week, that was very, very strong last week. Okay, let's get the daily chart. Yeah. So you can see, we talked about how we'd rallied off these levels, but that is quite some move there. For me, I would be probably looking to see, does that now come down to test the top end of that descending wedge? Does it come down to test that? And then, if that becomes bullish there, then I would see that maybe as a bullish opportunity for myself. So I'll be watching that over the next week to see how that particularly plays out from there. Okay, ladies and gentlemen, as always, time flies when you're having fun. I'm afraid we've run out of time there this evening, but as always, I hope you found that useful. I hope that's given you a little bit of insight, okay, a little bit of help and giving you some things to take away that you could look at and add to your own watch list. As always, I wish you the best of success in your trading and investing over the next week, and hope you have a great week. And I look forward to speaking to you next Wednesday, and I hope you'll join us then. Trade and invest well, everybody, and I'll speak to you soon. Many thanks.